So good morning, good afternoon, and good evening, everyone. Thank you all very much for joining. We're really excited about our discussion today and looking forward to hearing from our panelists as well as from all of you. We're here today to talk about the promise and the risk of buy now, pay later for micro and small enterprises. The discussion today will be moderated by, sorry, excuse me, I'm having some technical issues. Yes, the discussion today will be moderated by my colleague Fola, who's based in Nigeria, and myself. Both of us work for CGAP and are focused on our MSME program. We're really excited to invite our panelists to join today. We've got a fantastically diverse panelist group. So we've got Feisayo, who's joining us from Nigeria. He is the CEO and founder of Altara Capital. They do a lot of work with micro and small enterprises, particularly with the BNPL product. We're also joined by Mia, who is a supervisor with the Dutch Authority for Financial Control, the AMF, and she's been doing a lot of work directly on BNPL in the context of the European Union. And Mia has got a very good understanding of both the benefits as well as the risks of BNPL, and I think brings a really balanced perspective to our discussion. We're joined also by Srikara from India. Srikara is a research associate with Dwara Research, and he has recently co-authored a paper on the cost of BNPL for consumers and looking both at the financial costs as well as the broader risks around consumer protection. And last but not least, we're really excited here to have Tomas on the panel. Tomas is the head for small business lending with Mercado Libre, based out of Argentina. And Tomas has also been doing a lot with micro and small enterprises, particularly around BNPL, but also other credit products. As I mentioned, we've got a really diverse panel. So we've got representation from the EU, from Sub-Saharan Africa, India, and Latin America, and they all bring very diverse perspectives as well to the discussion. We will shortly ask our panelists to introduce themselves. Just a quick run through the agenda. I've already eaten into 5 minutes of my introduction and framing the discussion, so I will try to be as quick as I can. This will be followed by a brief introduction by the panelists, and then 25 minutes of a moderated discussion on the promise and risk of BNPL for micro and small enterprises. And finally, we will leave about 10 or 15 minutes at the end of the discussion for audience Q&A. In terms of logistics, all attendee microphones will remain muted during the webinar session. So we would ask all attendees to please ask their questions through the chat box on the right side of the screen on your Zoom. You can submit your questions throughout the duration of the webinar. And just to ensure that all of the questions are seen by the moderators, please could you make sure that you select everyone or all participants from the drop-down menu to make sure that everybody in the webinar can see your questions. The webinar is being recorded and it can be emailed to attendees and registrants upon request. So just very quickly framing our discussion, why do we think this is important and why we're here today? Micro and small enterprises are of great interest and to CGAP. So we see MSCs as absolutely critical to the livelihoods of low-income households. They provide income-generating opportunities and resilience to low-income people across the world. Nearly 70% of the workforce in developing countries is engaged in the informal economy. Either they're owners or workers of small businesses. And we have nearly 487 million micro and small enterprises in emerging and developing economies. CGAP's focus has largely been on the smallest of these enterprises, so those with less than 5 employees, although we have also in our research considered some firms that go from 6 to 15 employees, and this includes firms in the informal economy as well as formally registered micro and small enterprises. So while we understand that micro and small enterprises are absolutely critical for resilience and for livelihoods, MSCs persistently struggle with accessing the financing that they need. Data on what this financing gap is very hard to come by, but we have some research that we conducted with Dalberg in 2019 that indicates that the number for the credit gap could be as high as nearly $5 trillion, and the supply to the sector is at around $3 trillion. So there's still a big gap that needs to be addressed. This lack of finance threatens both the stability as well as the growth opportunities for these micro and small enterprises. However, despite decades of effort, this gap has remained persistently high. What we are seeing, however, is that technological advances are providing a sort of a pivotal opportunity to mitigate this MSC credit gap, with benefits that could accrue to both the customers as well as the providers. These technological advances are allowing us to surpass some of the supply side barriers that have traditionally limited how much finance could be provided to micro and small enterprises. Digital technology is reshaping every facet of MSE finance markets. So we're seeing disruptors, the fintechs that are pioneering new approaches and finding ways to get across these supply side barriers. That includes lack of access to collateral, lack of credit information, and just being able to reach these enterprises where the branch networks haven't been able to in the past. The incumbents, the microfinance and other types of institutions that are engaging digital transformations themselves to be able to reach their customers more cost effectively and efficiently. The MSEs themselves that are adopting technologies to run their businesses. We've seen a big trend upwards in MSEs adopting digital technologies, particularly through the pandemic, where with some it started with just payments, but it's also how they access markets and how they manage their business operations. And finally, the enabling environment. So we've got policymakers, regulators, and funders that are looking at all of these changes. And we would say this is the area where there's the most work still to be done for them to catch up with how digital technology is shaping how the disruptors, the incumbents, and the MSEs are changing the way they work. So for CGAP, we have a vision of a next generation of MSE finance markets, which is digitally enabled MSE finance providers, both disruptors as well as incumbents, that are responsibly addressing the needs of the MSE segment with efficient, effective, and tailored offerings. So where does BNPL come in? So buy now, pay later products are products where consumers can pay for goods at a future date or in installments over a short period. I'm sure everyone on the call already knows that. These products are available online and in store, and they provide a very important alternative source of finance for borrowers that were previously underserved or excluded. Technological advances are allowing fintechs to bring these cutting-edge BNPL products to customers where they are, wherever they might be geographically or otherwise. And BNPL products have a potential to revolutionize how MSME market is addressed by providing flexible supply chain financing solutions for businesses that struggle with substantial capital. So as I was saying, helping address some of those supply side barriers that have existed in the past. The BNPL market is seeing enormous growth. We've looked for data to indicate what this growth might be, and we've seen data ranging from a CAGR of 30% to 45.7%. But needless to say, the market is enormous. Currently, the market is very much focused in Western Europe and with a growing presence in North America. However, we see great potential for this market to grow in emerging markets and developing economies as well. Now, although it has enormous potential for unserved and underserved borrowers, it also carries significant risks. We see the risks of unfair and aggressive marketing practices, lack of transparency, concerns over indebtedness, unscrupulous debt collection methods, and concerns over consumer protection. But the risks aren't limited just to consumers. There are risks also for providers that didn't exist before. And that's what we want to discuss with our panelists today. So without further ado, I'm going to hand over to my colleague Fola to introduce our panelists. Thank you.
Yeah, thank you, Swati. Hi, everyone. Thanks for joining us today. So I'll move in briefly to the panelists. So we have panelists from everywhere, like she said, from different parts of the world. And I'll start with Faishayo. Please introduce yourself and give us a brief about what you do, just some information about what you do as well. Over to you, Faishayo.
All right, hi, everybody. Everybody calls me Faye. So I'm the CEO and founder of a lending platform that's based in Lagos, Nigeria. We currently operate 3 specific product lines. One of them is digital leasing, the other one, digital credit, and the last one is BNPL products. The way we kind of think about ourselves in terms of who we actually reach out to is we really focus and think about how do we provide integrated credit services into micro enterprises within Nigeria. So we specifically look at businesses that are effectively making between $2 and $5 a day in a top line. And what this effectively looks like on the ground are like people who are effectively selling food on the side of the road, mechanics, transporters, and things like that. I think where should I stop?
Okay, that's fine. Thank you, Faisha.
Okay,
Thanks for the
cool.
So I'll just move over to Srikara. Tell us about very brief your landscape and the work you've done on BNPL. Thank you.
Thanks everyone. Glad to be here. My name is Shrikar. I work with Dwara Research. I just noticed that the frame is kind of cut off, but at Dwara Research, our mission is to maximize financial inclusion. And that's our entry point into customer protection, about how to make financial services, and specifically in this context, digital financial services, kind of safer for customers. And that's where a customer protection mandate comes from. And that's the context in which we looked at BNPL products as well. Like Swati said earlier, we did a report on understanding what the monetary and non-monetary costs are for customers when they use BNPL products in India. And those are the findings I'm planning to bring to a discussion here, which might also be very, very applicable to the SME context. Over to you, Fola.
Thank you. Thank you, Srikar. Okay, so Thomas, please introduce yourself and give us a background.
Hi, thank you so much for the invitation to this webinar. I'm Tomás Piusi. I'm a director at Mercado Libre. Mercado Libre is the biggest e-commerce in Latam, and our mission is to democratize commerce and money over the region. We are valued at over $50 billion, and for the past 8 years, we have been combining this ecosystem with credit lines, both to sellers and consumers, and we have a combined outstanding of $2.5 billion. And we like to think about credit as a key part of the ecosystem to make it roll and continue expanding over the region. All over Latin America, there is a lot of lack of information, and all these SMEs are really unattended. And I think we play a huge part in inclusion and giving these small businesses opportunities to grow their businesses and reach a credit for the first time. We do offer several types of credits, from short term to long term, and I'm really looking forward to this webinar.
Okay, thanks, Thomas. So we've heard from LATAM to Sub-Saharan Africa, to Asia. So over to you, Mia. Please give us a background.
Thank you very much, and thank you for the invitation to participate in today's panel. So my name is Mia Junuzovic, and I'm a supervisor at the Dutch Authority for the Financial Markets, which is a conduct supervisor of the financial market in the Netherlands. I work within a team that supervises the consumer credit market, and my team has actually conducted an investigation into the Dutch buy now pay later market last year. We have published a report about this market end of last year, which is also available in English on our website, should you be interested in our findings. Buy now pay later is currently not does not fall within our supervision, as this service is not regulated as consumer credit in the EU. But the EU is currently looking at how to regulate buy now pay later as a consumer credit product. Even though the idea is to regulate it only for business to consumer transactions, so not for SMEs. I think that the insights that the IFM has gathered in our investigation about the benefits, but also the risks of buy now pay later, are also applicable to SMEs. So in that sense, I hope to share some of our findings today with you. Thank you.
Thank you, Mia. Thanks, everyone. So let's go right ahead into the discussion for today. I'll start with Faisha from Nigeria, and I just want to, you are an operator, you're providing the BNPL products and services in your organization. So we'd like to know your experience. What has your experience been with BNPL, offering this product or model to the MSE segment? And, just tell us about what you think the industry has been, how the industry has been approaching BNPL and the different offerings that you've seen readily available for the MSEs. Over to you, Faisha.
All right, so I think from an industry level, the way that a lot of BNPL works, I think kind of globally, is more consumer to merchant. I think within the context of like Sub-Saharan Africa, you're seeing more and more people with SMEs basically, but it's still a relatively nascent part of the model and how people kind of actually think about a BNPL. I think with what we have done to date, we have effectively looked at and seen how do we effectively integrate credit into vendor purchases that effectively allow us to reduce the overall level of interest rates that can be accessible by, again, specifically looking at the lowest income segment overall. I think until now we have reached about 35,000 partners in terms of, okay, how do we integrate this model? And what we have effectively seen is that these SMEs and micro enterprises prefer shorter term financing, principally kind of based on the fact that the interest rate environment in Nigeria can be very aggressive, which I'm sure Thomas can also speak to as well, is that you effectively have to find a lot of very creative ways to actually think about, okay, how do you price this in a way whereby you as the actual provider is protected, but also kind of addresses the actual needs of the micro enterprises as well. So like things around rebates, around pricing. And another thing that we do, again, to what Shrikara said, is on the Consumer Protection Act, a major challenge that has been witnessed is that one is just the overall level of absolute literacy here. So like when we first begun, we actually had a like major issue whereby only, I think, like 40% of our interested customers were like literate enough to actually like fill out a 5-line questionnaire. And so we actually had to like think about ways of, okay, how do we kind of bridge the infrastructure like a gaps as well. And what we also kind of like focus on is also providing a lot of education around financial literacy as well, because what you don't want is to effectively get into a situation like with what is happening in developing markets right now, whereby you are seeing like with a lot of Gen Zers, they are reaching a particularly problematic level of debt that has been driven by BNPL. So it's kind of like looking at, okay, how do we kind of look at this holistically while we protect ourselves, educate the actual end users to create an ecosystem whereby everyone's needs are basically met.
Thank you. Okay, so thanks for that. So I see that you're also taking consumer protection seriously. We'll get onto that shortly.
Sure.
I would like to get to Srikar. Thanks, Faye. So Srikar, I know that you also have a lot of experience working or researching and doing some work on BNPL for the MSC segment. So would you like to share some insights with us about probably the particular target audience that you think are most suitable to using this BNPL? Are there specific examples of descriptions of some of the available models that you're aware of that target MSEs? Just tell us your experience in general and probably the benefits of the products to MSEs.
Yeah,
Over to
absolutely.
you.
Yeah,
Thank you.
thank you. Absolutely. So in our report where we looked at B2C BNPL, what we saw over there was that BNPL providers were essentially targeting millennials or students, like they said, who weren't really able to get credit on their own. But there was this huge market where they made a lot of purchases, and like finance could have really helped them. That small ticket credit, which could help them make purchases that they ordinarily might not have. The ultimate idea there was to kind of democratize BNPL among more groups of people who might not have traditional access to credit. And the idea is essentially the same. You could, a BNPL provider could use multiple points of data kind of come up with a credit assessment and then provide a sanction, a credit line based on that. When we did when we surveyed the B2C BNPL market, what we saw was that we surveyed about 10 big players in the market back then. And what we saw there was that the different data points these guys were using, they stretched across demographic data, just like name, age, email ID, so on and so forth. But it also went into their occupational information, educational information, their general payments, transactions, etc. So it really did. So one part of it was obviously a traditional credit bureau pings. But if that weren't adequate, they always went into alternative kind of data. Now, this allowed them to perhaps underwrite more users than a traditional lender might have reached. But what we did kind of conclude was that although BNPL was targeted to reach underserved customers, it mostly seemed to be serving customers who'd be in that prime category who could get access to credit cards and maybe term loans if necessary. So although there was this promise that we could see, it wasn't materializing in practice. And why that was the case, I think we weren't able to get to the root of that, but a couple of reasons we could think of was, I guess, just in terms of how BNPL was driven digitally, right? That might have been one point of exclusion about people not having the smartphone infrastructure or just the digital partnerships one might need to kind of roll out BNPL offline as well. And in those cases, we've seen interest. So the narrative was that BNPL does not really carry any interest or fees. But then again, investigating that kind of shows that interest is almost like a post-default charge that occurs. And depending on how much you are overdue and how much you've defaulted on, these flat fees can kind of range between $0 to $3,000. So if you had to convert that into an interest rate, you might come up to anywhere between 0 to 50%. So the interest rates are pretty high, almost comparable to credit cards in some cases. And then just the general narrative that BNPL does not carry any charges was also falling through when we looked at pre-disbursement charges in terms of processing fees or any other administrative fees that come up. So there was a significant cost portion that was coming down. When we just looked at the MSME context separately, what we noticed there is that BNPL is kind of taking a similar route in terms of who it's financing. I mean, the idea is that they reach more MSMEs that have not been covered by traditional finance, but I think a lot of benefit is accruing to MSMEs that are already have a credit link, but maybe the credit process is more seamless now. And from the companies that we were able to look at, there are reports of these companies kind of reaching new MSMEs that haven't been given credit before. But again, that's something that we'll probably have to investigate a little deeper. In terms of how it's panning out, I think it's mostly in terms of supply chain financing, working capital. These are the products that the B2B BNPL is kind of serving. But I can't really comment on the interest rates or any of that so far.
Oh, interesting. So I think the interesting part of what you've said now is that even though we're trying to target the underserved, you see that it's those that already have access to credit cards and some other lines of credits that are focusing more from your research, or that are picking up the products more from your research. Okay, that's really interesting, and that's good to note. We'll take some questions later. Please, if you have more questions from the audience, please put your questions in the group chat. Don't forget that. Okay, Swati, please, over to you for the other questions.
Thanks, Fola. So I think, Faisal, you raised an interesting point around making sure that the provider is protected as well. So the next question we had, maybe if I could ask Thomas to jump in first, is could you talk a little bit about from the provider perspective, right? What are the opportunities that you see for scaling, particularly with the MSME market, but also what are some of the risks that you are seeing from the business given where you are in Latin America?
Okay, I think that's a great question. On the opportunity side, I think first of all, it's really an unattended sector in the economy with a really high need of credit. So this gives you a big opportunity to scale these products and these credit offerings. And when talking about scale, you showed some numbers, but in Latam we see mostly the same. Like 97% of the companies are SMEs. 70% of the employments come from these companies, and almost 50% of the GDP is generated by SMEs. But when you look at it on the perspective of private sector credit, only 15% of the credit goes to SMEs. So it's a really big gap between the demand and offer to this segment of the economy. And I think that with technology and all the machine learning models that we have now, we can assess credit without human interaction. That it's key for small SMEs because the distribution costs lower a lot. So this is a really big thing for us to scale. And on the regulation side, we also are seeing in Latin America many new regulations coming, like open finance and consulta recibibles and other regulations that are coming in different countries of the regions that really bring a new opportunity to scale this kind of products. When looking at the challenges, I think that first of all, there is a huge responsibility from the credit providers. In most cases, we are the only ones giving credit to these SMEs. So we really need to be responsible on the cost and what we're giving to this company to let them grow and make it a win-win situation. And I think that another risk that we are facing is all the macroeconomic shifts that we see in Latin America with a lot of political turns, in high inflations, and all these things that really affect these companies, as well as all the post-pandemic things that happen and all the debt that these SMEs had during the pandemic. And I think that the last big risk of SME of scaling this is the funding cost and distribution cost, because when trying to scale your product, it's really important to get low funding cost and to lower as much as you can the distribution cost of the products you offer.
That's a really interesting perspective. Aisha, would you agree that it's a similar situation in the context of Sub-Saharan Africa?
Yeah, I think, so what Tomas just said, I think everything we've seen is like multiplied by like 10x here. So I think to the point that Tomas was effectively making about SMEs in Latin America, in Sub-Saharan Africa and more specifically Nigeria, like micro enterprises. So like these are like single individual businesses account for close to like 65% of the actual businesses here. In terms of the actual like data that you can effectively use to address like credit scoring and to effectively like feed into the algorithm that we have had, we collect a lot of data around financial data. But what you effectively find again is that because of a lot of transactions happen in cash, it's very, very difficult to effectively be able to have a robust enough kind of data set to actually see like, okay, what is the actual like person's credibility? I think another one that you would really need to actually pay attention to is just the like level of customers who even have any data. So like even, I think the current banking penetration here is what, from my more recent readings, about 30%. And so there are just a lot of different like barriers around, okay, how do you understand, how do you underwrite credit risk in a way that actually allows you to actually do this on a profitable basis? I think from what we have actually seen is towards what Shrey Kara said, was effectively looking at a lot of alternate sources of like data around demographics. So how long has the person been claiming to actually work where like they work? How large is like their family? All of this other data, all these other details, which is like a lot more expensive to actually collect. But we have actually like found that we have been able to actually like build a very successful working algorithm that effectively allows us to generate a relatively high confidence interval on a client's likelihood of actually paying back. I think really quickly, to understand a little bit of the like what I would kind of define as like the like three biggest challenges when we compare our markets to developed markets on a BNPL. The like first one is the idea around exclusivity. So the way it works in like Klarna, let's say, is that they effectively have a fully exclusive agreement with a specific retailer, which effectively says only Klarna customers can effectively participate here. The issue is here, because contracts and exclusivity are treated as like very like fluid concepts, basically. You don't really get that relationships nor the actual margins there. And then I think to what Tomas said again is the underwriting landscape, because again, if you look at a company like Klarna, in terms of the actual like a financing, what they effectively do is they will partner with a traditional bank or another financial institution who will effectively underwrite the actual risk. So all they have to do is the actual payments. And then I think the last point is around even managing the actual vendors of like, okay, how do you effectively ensure and prevent that they're not hiking up prices and effectively colluding with the actual clients to ensure that they are protected either way, and you are kind of left holding the bag. So like there are a lot of different nuances in developing markets around standing and actually like building controls to effectively make this work. But the ultimate challenges are the rates, the macro, and the exclusivity, because without that overall support, it is very difficult to actually do everything yourself, because like that is basically where we are now, in that like we have been able to actually build all of this out, but we have to literally do like every single part of the value chain, as opposed to, okay, how do we effectively outsource this to like a bank? How do we effectively outsource this to a payments company? Is like with Altara now, we do everything, which kind of makes us move a lot slower than we would like to. So even like something as simple as concessionary loans would solve like a lot of problems.
Yeah, I think what you're saying makes sense. So it sounds like the challenges actually Latin America and Sub-Saharan Africa aren't really that different. There is a great potential to scale, but we think a lot about how the consumer's at risk, but it's just as important to think about from a provider perspective. There are very inherent macroeconomic and other risks that you need to consider as well. I think that leads us well into our next question. Fola, do you want to pick that up?
Okay, so we're still talking about some of these challenges. I mean, we've talked about the myriad of challenges, but let's now put a lens on consumer protection itself, and probably how do these challenges even relate to the financial system as a whole. So I'll just move over to Srikar. Please, would you like to just share your thoughts around how this is playing out, especially with respect to emerging markets where you've worked?
Yeah, sure. So I think just as Faye had framed it, I'd probably divide it into like the customer side concerns and the provider side concerns. Just to take the customer side concerns, I think there are two big ones that I'd like to point out. One is issues around suitability. I think like Swati had mentioned earlier, a lot of the small enterprises that we kind of look at in India are essentially households, and they operate at a household level. And it's kind of well established now that at this level, household finances, household monies, and like the business money kind of get muddled up. So there is the lives get mixed up. So there is some element of whether a particular BNPL loan that is kind of pushed to a customer, or in this case, a SME, is kind of suitable for them. I think that would be the first big one. The second big risk that we discovered when we were going through the retail BNPL side was just misconduct. So when we perused through all the terms and conditions of all on which different BNPL providers kind of offered their products, we noticed two things. One is some of the provisions were either in contravention to regulations, or some of the terms and conditions are essentially kind of how do I put it? They were putting a kind of unfair burden on the customer to kind of make sure that the loan is suitable for them, or kind of putting the burden on customers to say if there's any difference in the terms and conditions, it's on you to kind of check what has changed. So essentially, a lot of disclosures that might have helped a customer make a better decision about BNPL, or better understand the product that they're signing up for, those disclosures are not clear enough. So that's on the customer side, the big ones. On the provider side, I think it's, I think where I identified the fraud bit, but then it comes down to what chunk of the loan. So we know that in this chain, usually it's the middle merchant that's kind of bearing the interest cost, so to say, when it comes to the chain. So what happens when providers kind of decide to push that cost, or like, pass it on to the customers? That might just mean that the price of the ultimate good that customers pay might be increasing. So that was another thing that we looked at on the provider side. But I think I can kind of defer to Mia from her investigation as well, and I can come back later if need.
Okay, so let's get to Mia first, then we'll come back to this other discussion. So for Mia, as a regulator, I think you should just touch on the emerging risk that you've seen and how it relates to consumer protection and the financial system ecosystem as a whole.
Yeah,
over to you, Mia. Thank you.
So there are definitely quite a few risks and challenges that we have seen. I have tried to kind of think about two topics that would be applicable to both our markets in the EU, but also to emerging markets. And I think in any case, two things that are very important to consider are, first, on the one side, how to balance between access to a product such as buy now, pay later, and how to ensure responsible access to buy now, pay later, which is also something that previous speakers have addressed. So the way in which it is assessed whether a consumer should get access to buy now, pay later, and I'm sure this is the same for SMEs, is quite innovative. Providers rely on a lot of data. They source their data from third parties, very often from specialized data parties. Some of this data comes directly from the consumer, some of it comes from public sources. And it can give a picture of a person's financial situation and personal situation that is then decisive in deciding whether to provide buy now, pay later or not. So this process is quite different than a process that you have to go through as a consumer when it comes to traditional credit. It provides opportunities such as greater access to the product, especially for those who cannot access traditional credit products as easily. However, at the same time, it does also entail certain risks because these processes are also vulnerable to mistakes. First of all, what we see in the Netherlands, and from what I understand, this is quite a common problem across many markets that in which buy now, pay later is so popular, is that the debts that are accumulating via buy now, pay later are often out of sight, as these debts are not really registered in any credit registration agencies that operate at this moment, whether those are private or public, central, decentralized. So one particular issue is, are we overseeing a potential, mountain of debt stapling all around the world? And how do we balance ensuring that as many consumers as possible have access to a certain product, whilst also ensuring that this access is responsible and that the product is really suitable to their needs? As Shikara mentioned, it seems from research that sometimes usually the consumers that get the product are not the ones that actually really need it or that cannot access other types of credit products. So that's one topic that we could talk about for a long time, but I'll mention another challenge, which is also interesting to consider, and that's, I think, transparency. There's a lot to unpack when it comes to transparency and information, use of data, algorithms. So I think the product could certainly benefit from more transparency in relation to consumers. So what we see is that consumers do not often realize that buy now, pay later is in fact a credit product, because a deferred payment or installment payment is a credit product, even if it's not regulated as such. And what that means is that if you do not pay on time, if you cannot pay, you might incur high late payment fees, you might be transferred to a debt collection agency. So there are certain consequences that come if you cannot meet your obligations. But the disclosures and warnings about that risky aspect of buy now, pay later are often not clear or prominent enough. At the same time, the product has clear benefits. Also, in principle, if you pay on time, it's free or provided at a low cost. So in terms of, if you compare it with traditional credit cards, for instance, there's definitely, there are clear advantages of the product, but communication about the risks, especially about the cost of non-compliance, non-payment, that can be improved. And also, I think there's a big data aspect that is related to the product. There are many different aspects of the data issue, and what we also see is that the product is, or the analysis is, based on a lot of data, and the question is, how clear is that for the consumer? So once the consumer, for instance, is rejected, doesn't get access to buy now, pay later, very often what we see is that the consumer doesn't understand why. So there's often no explanation on why the algorithm said no, and what is the reason that the consumer cannot get access to buy now, pay later. And of course, all different issues with regards to data collection practices, privacy, which is a big topic in the EU, but gaining more and more popularity around the whole world. So these are kind of the issues in a nutshell. So I will stop there so we can have enough time to unpack them.
Yes, thank you. Thank you so much, Mel. So the data collection practices, I mean, that rings a bell, and that's really very important in this discussion. So let me quickly hand over to Swati so that we can wrap this up. Swati, would you like to?
Yeah, thank you, Mia. I think that was very interesting. And so I think for me, it raises a big question around, so what is the role of the regulator, right? These are, as you said, these are unregulated. And I mean, can a regulator now start regulating Amazon? We don't know whether that model is fit for purpose either. But Thomas, I'd be interested from a provider perspective. What do you see as the role for a regulator, and how can effective regulation help you as the provider as well as the consumer?
I think regulators also play a great role in economy, and we do need state policies that help SMEs to get better credit conditions. I think that the great challenge comes when the regulation is really structured, and it may up reducing the access to credit instead of increasing it. So as well as the providers have a great responsibility, I think regulators as well have a responsibility to regulate in a proper manner. When looking in Latin America, we haven't seen much regulations specifically for buy now, pay later products, but there is a lot of movement on the credit and fintech side to level the ground between all the providers. I think that the key regulation that is coming in Latin America is open finance, where we have seen the first steps in Brazil. It's going very well. Mexico is going through the same path. And this is a great regulation that helps any provider to get information and lower the cost of the whole economy as a whole. On the other side, I think that there are other regulations that are not they're not that good for access, such as cap rates, because in most of these cases, when you cap rates and the cap rates are really low, the thing you make is that you lower the credit offering to businesses, and there are a lot that may up not having any credit line, and only big companies get access to it. So I think that regulators play a great role, and they're as responsible as the providers to make this business grow.
That's a very good point. I think that's something that Srikar raised earlier as well, around the fact that they're finding in India, for instance, that actually we think this is a great product for unserved and underserved, but it is people that are already being served that are also accessing BNPL products. So managing the pricing around it is also very important to help the providers manage their risk. Mia, from your perspective, what is best practice in regulation that we're seeing? How is this progressing around the globe? And we have a question from one of our participants that I think is also interesting, is whether you think that existing rules on consumer protection can be applied to BNPL or adapted rules will be required.
Yes, thank you. So I must say that at least in the jurisdictions that we were looking at when we were conducting the first phases of our investigation, and that were America, England, Australia, because we needed sources that were in English and that were published and publicly available. We didn't actually see any specific regulatory solutions that I could already, share with you as good practices. What we have seen is that all of these jurisdictions, and not only these jurisdictions, but many more, are currently thinking of whether and how to regulate buy now, pay later. So we see that this is really a global movement. And that this is a great moment to share our own struggles and experiences and ideas with each other, and to learn from each other. What I think the most important thing to keep in mind as a regulator or legislator when it comes to buy now, pay later is proportionality. So I think so far, most ideas revolve around the application of the existing consumer credit regulation to buy now, pay later, which I think is generally suitable to address buy now, pay later, or at least the risks that come from it. But what's also important is to really consider whether and to what extent the current legislation is proportionate to a product such as buy now, pay later. And certain examples where we might have to think about the current rules and perhaps twitch them are, for instance, information provision. So in a lot of jurisdictions, we have come to a situation where we have extensive information disclosures that are imposed on providers, but these disclosures are not very suitable for the online environment. So we see that they're not very efficient, and they're not really tackling the information asymmetry that is existing between the consumer and the provider. So in the online environment, different types of disclosure as might be needed in comparison to offline environment. What we also see, for instance, is that what we have all speakers have mentioned today, that the underwriting process is a process in which we will face certain challenges. So, for instance, traditional lenders are often required to verify certain information through, for instance, salary statements. The question is whether these processes are suitable for buy now, pay later, for such products that focus on giving quite a fast and efficient process and opportunity for consumers. As regulators, we are first and foremost concerned with consumer protection, and of course less with efficiency and being fast, and so thoroughness is more important. However, we do understand that the traditional tools we know might not be entirely suitable for these new products. And here, what Thomas also mentioned, open finance, open banking might be a good tool to balance the need for a good creditworthiness assessment versus the need of providers as well to actually be able to do that in a decent amount of time. So these are just some examples, but I think it's really about probably applying consumer credit regulation that we already have, or at least the most important aspects of it, but also looking at in which segments it is not proportionate and how to make it proportionate, tailored to buy now, pay later.
Thank you. As with every great webinar, we're running out of time. So just a very, very quick, literally a 5-second response. Do you think that the regulation for MSCs will be similar or can be derived easily from the regulation that you would come up with for consumers, for retail consumers?
I think so. I think that in the core, all of these core topics that we talked about, like the underwriting process, disclosures, making sure that the consumer or the user of the buy now, pay later, that could be a natural person or a person acting in the course of trade, really understands what the product is, how it operates, so that there are no misconceptions about the fact that it is in fact credit and that it has certain consequences if you don't pay on time, what happens if you don't pay on time, and also ensuring that providers have tools to help consumers or businesses who end up facing financial problems. As what we do not want to see is, of course, that in these difficult economic times, that those who are struggling economically or whose economic situation changes cannot access any forbearance measures, do not get payment holidays or do not get any other help. So that would be, but I think it's applicable, yeah.
Got it. I think we're running out of time. So I think, Fola, we have one question that you were going to pick up with from the audience.
Yes, so we have an interesting question on gender features, how gender features in BNPL. And so I'll just wrap it up, with the final question we wanted to ask. It's about what the different gender disparity in the way BNPL products are being used by consumers. So I'll just direct this to Srikar briefly. Can you just tell us the key things you've seen about gender and uptake on the gender analysis for BNPL products?
Yeah. So I think it's really difficult to answer this in a straightforward manner because there's just not enough gender disaggregated data on who's receiving what kind of loans. But if you look at it from a proxy in terms of what the gender gap is in bank account ownership, bank account usage, mobile phone ownership, so on and so forth, we do see that women tend to lag behind men for numerous reasons. And just in the absence of, that access to banking infra, access to smartphone infrastructure, and even just the general, I guess the greater likelihood of having no formal credit history, I think these automatically kind of put women at a back foot when it comes to accessing BNPL as well. So maybe the frontier there for BNPL would be, how do you close that gap? What are the other parameters we can take into consideration? Are there other form factors we need to take into consideration when giving BNPL? But I think intuitively that would be what I take away, that women would be lagging behind.
Thank you. So now, mentioning the gender gap, how do you want to close the gap? Let me just talk to Thomas. Can you just tell us, based on your own experience with e-commerce and BNPL, what are your experience with the gender disparity?
Yeah, in our case, almost half of our sellers were women. This rate has been increasing in the past few years, and we do see great disparity between countries. In Argentina and Brazil, it's more or less the same. Half of our sellers are women and the other half are men. But in the case of Mexico, only 30% of the sellers are women. During all this period of the past few years, we have lent to almost 1 million 1 million women, and we haven't seen much difference in their behavior or adoption rates. So it's more or less the same between women-led businesses or men-led businesses from our perspective.
Oh, interesting. Okay. Faye, do you have any different opinion to this or experience based on your product?
So yeah, I can talk a little bit about what we do now operationally, and then kind of things that I think about in the future. So operationally now, I think it's like maybe 45% women to 65% men, if my math is right. No, 55% men, sorry. But I think one of the things that became readily apparent, because right now we mainly operate in the like liberal South, whereby like women's rights on a relatively basis are a lot higher than in the North. So about 1.5 years ago, I took a trip up to Kano, which is a lot more Muslim dominated. And I was a little bit stricken by the fact that like I was there for 3 days, and I think in my entire 3 days there, I only encountered two women total. And I was out in the markets and I'm really trying to understand the actual like a landscape there. And I was kind of thinking like, look, if we try to do a fully integrated model, specifically kind of targeting women in the northern regions, it will be extremely difficult because just having access to women will be very difficult. So I think when I think about our expansion plans across Nigeria, a big part of what I think about is like, okay, is there a way at least to have a more integrated model? Because with a lot of religious doctrines, it's also a little bit problematic for a man to even approach another man's wife. And so it would almost have to be like an integrated pair by pair model, whereby we are approaching them as a family to actually ensure that we are including women in the overall decision making and actually bringing them to the fore. So again, I don't think it's necessarily impossible, but I feel like the further away you like get from like the like sort of like normative thinking driven by Western cultures, and really pay attention and like focus on how do we integrate what we are doing into like local context, the more creative you have to be in terms of thinking about responsible inclusion.
Thank you, Faisal. That was really helpful. So we had, Fola and I had wanted to ask the question around gender ourselves, because this is a very important issue for CGAP, and particularly when we're thinking about digital finance, right? To what Srikar said earlier in his initial question, we have to be cognizant of the fact that in fact, digital finance has the potential to create an even greater digital divide. And we do find from all of the data that we collect that women are slower to pick up on digital products and engage in the digital economy for a variety of reasons. So I think it's an important factor for us to consider. It would be interesting as we progress to look at some gender disaggregated data to see how it's playing out differently across male and female borrowers. But with that, I think we're over time. It's been a really good discussion. I've really enjoyed it and learned a lot. And we're really grateful to all of our panelists for the time that you've taken, and to all of our participants for joining at different times of the day, wherever you are. Thank you all so much. And as I mentioned, we have a recording of this webinar, and we're happy to share it with anyone. Just drop us a line and we will go ahead and share that with everyone. Thank you very much.
Great.
Have a good rest of your day, how much ever of it is left. Thanks.
Thank you. Have a good day.
All right, thanks a lot, guys. Absolutely wonderful.